With EIP 1559 right around the corner now, let's have a look at the path towards Ethereum becoming a deflationary cryptocurrency. Now, if you're unsure of the ramifications of Ethereum's EIP 1559, come and check out my videos shown on screen here as I go into detail around how the proposal affects ETH and the fee model. This is a historic moment in Ethereum's history and can't be overlooked, as with EIP 1559 and the upcoming merge to proof of stake, we could really see a parabolic rise in the price of Ethereum to eye-watering levels. If you enjoyed the content in today's video, make sure you subscribe to the channel. Let's jump into this one. So depending on which chart you look at, there were 13 days of green candles in a row for ETH. It went on a hell of a run here from July 21st, up a total of around 52% before retracing slightly today. Some people will argue we've had a bit of a buy the rumor, sell the news event coming up, but after such a meteoric rise, it's only natural for the price to start to come down again. The same can be said about the Bitcoin chart, which is now showing some signs of consolidation after its meteoric rise as well. So now ETH is sitting at around $2,500, but will we see a continuation in the price rise once EIP 1559 goes live with the burning of Ethereum tokens? So I picked out this thread as a really good one from Corpy87. He put together some of the ramifications behind the Ethereum improvement proposal. So here are some things to note. 1559 doesn't make ETH deflationary by default. It will start burning Ethereum, but it does not automatically make it a deflationary cryptocurrency. There are caveats to this. And it also doesn't reduce ETH supply by 90%, which some are referring to as the triple halving. This comes later in the year. But it is, however, still very bullish for ETH, the asset. So first and foremost, EIP 1559, one of the most important upgrades in Ethereum's history, moving from an auction model for block space to a more equitable one where gas fees can be better estimated, and we see the base fee no longer go to miners but get burned from existence. So this won't actually lower gas fees in the long run. It's not a scalability solution, but it will help users not overpay for transactions and help them better estimate fees in that process. And it will also smooth out the increases and decreases of the gas prices when we see things such as NFT drops or pre-sales, which historically caused huge spikes in demand for block space. So with the base fee being burned, it does mean a removal from circulating supply, but it doesn't mean an immediate move to deflation of the asset. For that to happen, ETH burned must be higher than the ETH issued in block rewards. And whilst we're still in a proof of work mechanism, ETH's issuance will still be quite high at around 4% of total supply annually. But to offset this issuance rate by ETH burn, after 1559, we need around a 150 GWE cost per transaction to make it deflationary, which we have seen numerous times recently, but this isn't a consistent area of gas price that we're continually getting to, but more of a one-off at this moment. But this situation will change quite dramatically when Ethereum moves over to the proof of stake consensus algorithm with the merge scheduled for the start of 2022. This will reduce the issuance rate to around 0.4% annually. This will be around a 90% drop, as you can see from this issuance rate here once this goes live. And this will effectively drastically reduce the amount of new Ethereum hitting the market, and so that supply will really level off. And this is what people are calling the triple halving effect. So once the merge happens and we go proof of stake, we're looking for a transaction fee of around 20 GWE to actually make ETH offset the new issuance rate. So anything over 20 GWE would actually make it deflationary at that point. And this is not far-fetched at all. We're consistently seeing a gas cost of over 20 GWE. And with all the new products and utilities being rolled out on Ethereum, the hype around NFTs, we're going to have more demand for DeFi going forward and other use cases being built out. You can see it easily surpassing 20 GWE on a very regular basis. And so we would see a supply shock and supply crisis to Ethereum and see that total supply consistently go down. And when the supply goes down and demand is going up, you know what happens next, the number go up. So in summary here, he puts EIP 1559 will burn ETH, but not make it deflationary by default. With proof of work, only high gas fees can offset the high issuance rate. But the upgrade to proof of stake can be referred to as the triple halving due to a large drop in ETH issuance. So 1559 plus proof of stake equals deflationary Ethereum. And then we have the meme, ultrasound money. So we can see this heat map here of the average gas prices over the last week, and you've got pockets where this skyrocketed. I think this is during some NFT drops, a gas cost of 267 Gwei during this 1 hour period. But generally across the board, you're looking at Gwei costs of around 20, 30s and 40s consistently. So under proof of work still, post EIP 1559, we're not going to see regular deflation of that ETH supply, but just sporadic areas where we do go deflationary due to those increases in demand, which at this moment in time are mainly down to NFTs. Just think Stoner Cats from Mila Kunis and Ashton Kutcher. There was millions of dollars of gas just wasted by failed transactions for people super eager to get in with that NFT drop. So whilst at this moment in time, it's very annoying when you want to do transactions, post the burn era, very beneficial to all holders, because even if you see the gas cost is in the hundreds, at least you can sit there safe in the knowledge, knowing that your ETH is going to become more valuable due to the network burning more and more Ethereum with those high transactions. So on the ultrasound money website, you can see we are just around 2 days from this activation. It is going ahead after some potential hiccups were rumored, but apparently everything is a-okay to crack on right now. And with this widget down here, you can actually have a play around with it and see how the network is affected by increasing the staked amount of Ethereum and the gas prices. As you can see up to this line here, this is the London upgrade, but post the merge around here is where you can actually make it go really deflationary by playing with these metrics, specifically with this base gas price. So if we decrease this below 20, you can see if we put it onto like 1 or 2 Gwei, this is slowly trending upwards only slightly. If we increase it beyond 20, you can see that is now decreasing, and the total supply of Ethereum would therefore be going down. The higher the Gwei, the greater the burn and the less Ethereum in existence. Now, if you're interested in earning an interest rate on your Ethereum, check out Celsius. I'll leave a link to them down below. They've got a really great offer on right now where you can get $50 in Bitcoin for depositing $400 or more onto the app as a new sign up. All you have to do is leave it for 30 days and you'll get that $50 in BTC credited to your account. You will also earn 5.35% APY on your Ethereum. So just deposit 1 ETH, wait 30 days and get $50 in Bitcoin. And if you're not happy, you can just withdraw all that afterwards. But I think this is well worth getting involved with that special promotional offer and earning $50 in BTC. So Raoul Pal is super bullish on Ethereum. It makes up a huge proportion, 55% of his overall crypto portfolio. And in a recent post, he put this: just writing global macro investor and don't want to spoil it in advance, but so many people look at on-chain analysis of BTC and forget about Ethereum. So the on-chain data plus August 4th with EIP 1559 plus the network growth going on right now equals a ludicrous supply shortage. He then posts this chart mapping the price of Ethereum versus Bitcoin in the 2017 bull run, and Ethereum is charting a very similar path to Bitcoin during the last cycle. And so Raoul puts his price prediction for Ethereum over the next 12 months, he stated, as hitting at least $20,000, as he believes that the adoption rate of Ethereum is greater than that of Bitcoin during this period in time, and so it can surpass the highs that BTC saw in 2017. And so this would see Ethereum do roughly an 8x from here, which would just be absolutely phenomenal, put a smile on most of our faces and ensure that we have the opportunity to cash out some incredible gains from Ethereum. I'll just pull myself out the way a little bit so we can see some of these on-chain metrics, starting with this, the balance of ETH on exchanges. As you can see, it's been consistently sloping all the way down here. And over the last month specifically, the amount of ETH on exchanges is really drying up. We're recording around 15,500 ETH left on exchanges. The supply crisis is coming, and this can be reflected in the recent uptick in the price action. And if this sustains, you can only imagine that the price will only have to go up as supply and demand have the ultimate face-off. We're also seeing Ethereum in smart contracts continue to rise up to the top right here. People are continuing to deploy their Ethereum to generate yields, and with a growing optionality of different yield-bearing platforms and DeFi applications, you can understand why this will only continue to go up. I would also factor in the NFT space right now, as so much ETH is being sucked into this new sector of the market, and that also looks like it's going to continue as well. So everything on this network sucks up more ETH. As of late, the NUPL, the net unrealized profit or loss, has actually started to tick back up again. So below this zero line here means that the short-term holders of Ethereum were actually in a loss. And this does unfortunately mean that people sell at a loss. The loss makes them fearful, they exit their positions, and as you can see, the price comes down. But as people are starting to realize that their ETH is back in profit once more, the price also ticks up, as this is that strong psychological effect of price on market participant behavior. But as people do return to a profit, they hold on in expectation of greater returns. And then we finally have the total value of ETH staked, and with increasing options for staking your Ethereum into 2.0 nodes and actually still being able to free up that Ethereum, people are going ahead and doing this. And the number is just consistently going up. The biggest ETH staker now is Lido, over $2.79 billion worth of ETH staked with over 17,000 stakers. This allows you to stake any amount of ETH and earn daily staking rewards. You put your staked ETH to work across DeFi to compound your yields then. And this is a very popular solution that many people are jumping on board with. And this just means more ETH locked into the system. Now, 2021 has to be the year of the NFT. We're seeing OpenSea absolutely blow its previous numbers out the water. In 2018, it did just under $500,000 in trade. In 2019, that rose to $8 million. 2020 up to $24 million. And in 2021, and we're just over halfway through, it's already done over $1 billion in NFT trades. So this growth curve looks mighty impressive, and this is now an additional string to the Ethereum bow. It was DeFi in 2020, and now we have DeFi plus NFTs in 2021. And what could possibly be next over 2022 and beyond that will further boost this network? The possibilities are endless. We're going to have a little look at a few on the cards in just a moment. But sticking on the EIP 1559 agenda, I bought one of these, the 1559 supporters NFTs. So these were actually created to commemorate the Ethereum improvement proposal and to actually reward some of the contributors to this, the authors, the teams, the researchers, and those who managed to get this deployed to mainnet. So the proceeds are split out to many of those in the Ethereum community. And so this is a legit NFT commemorating the event. So I bought this as a bit of a speculative play, as I see that this is a historic moment in ETH's history, and I do believe the long-term value of these NFTs, with a max supply of 1,559 as you'd expect, will continue to rise. Go and check them out over on OpenSea. And then in terms of those utilities, even Vitalik has mentioned more utilities must come for ETH. It's a general purpose blockchain, and it can do so much more than just DeFi. So during his keynote at the ETH community conference in Paris, Vitalik implored the Ethereum community to innovate beyond the confines of DeFi. He said that being defined by DeFi is better than being defined by nothing, but it does need to go further. And if we just check out the consensus website, you can see some of these areas in which they're looking to really expand. So with two killer use cases so far, DeFi and NFT, adding some of these huge utilities and areas such as capital markets, CBDCs. We're already seeing the digital shekel being tested out on ETH. You can imagine how this will affect the price of Ethereum, the amount that would be locked up when these things do take off. Digital identity, energy sustainability, insurance protocols, government and public sector records, healthcare and life sciences, law, media, entertainment, real estate, social impacts such as the remittances markets, sports and even esports, another booming market, supply chain management, and a lot more. The future for Ethereum is ridiculously bright. And so when you hear these crazy price predictions like Raoul stating $20,000, by this time next year, there is certainly a path towards this. So I'm definitely super bullish on Ethereum. It makes up the biggest holding in my portfolio. And so I will leave you with this little bit of fun from the ETH guys celebrating ETH 2.0.
Shot 3, BLS, Lamborn, and all of this crypto just sets the stage for broken rules, plasma chains.